If you've been hearing that Palm Springs is dead right now, the January numbers tell a very different story. Prices are softening, inventory finally looks normal again, but this is not a crash. It just feels weird because it's nothing like 2021. In this video, I'm going to decode the latest data so you can act with a clear plan instead of just guessing off of headlines. You'll see where the prices are actually dipping, how much leverage buyers really have, and why smart sellers can still win. And I'll answer the three big Reddit questions that I keep seeing. Let's start with what's actually happening, not what people are saying at happy hour. Hi, Neil here, your local living in Palm Springs area realtor. The best full snapshot we have is the December 2025 Desert Housing Report from the Greater Palm Springs Realtors, which is basically the MLS data for the entire Coachella Valley. This gives us the baseline rolling into January. The big theme is this: the market is normalizing, not crashing. Think of it as the difference between slamming on the brakes and then easing back to the speed limit after driving way too fast for 3 years. For single-family homes across the entire Coachella Valley, the median price ended December at $660,000. Now that's down 0.8% from just a year ago. So yes, prices are a little lower, but that's a mild dip layered on top of a very large pandemic-era gains that are still in place. When you zoom in on Palm Springs specifically, the price of an average single-family home is $1,277,000. That's down 5.2% from last year and about 20.5% below the big 2022 high. Now that sounds dramatic, but remember, 2022 was an extreme peak. We're essentially giving back part of the froth, not rolling back to pre-COVID pricing. Attached homes, which are condos and townhomes, tell a slightly different story. Valley-wide, the median attached price is $460,000. Now that's down 3% year over year. Condos always have a bigger seasonal swing, especially in a second home and snowbird market like we have here in the Palm Springs area. So they do feel more volatile. In Palm Springs, the average condo price is around $425,000. That's off about 5.3% from last year, but it's still well above where these prices were before the big pandemic run-up. If you own or you're shopping for condos, that extra movement is normal here, not a sign of collapse. Now, what about demand? The 3-month average of sales in December was 551 units compared to 504 just a year ago. That's a 9.3% increase. The 12-month average is 623 sales a month, up from 610. So sales are not falling off a cliff. They're actually a bit stronger than last year, just nowhere near those frenzied levels that we had when the rates were down near zero. Palm Desert leads on unit sales at 124, with Palm Springs right behind at 113. That tells you that buyers are still gravitating to these core cities. They're just being more choosy and more price sensitive. On the inventory side, things finally look like a normal functioning market. Total Valley inventory sits at 3,028 units. That's up 4.5% from last year. That's back in line with pre-pandemic levels. The month of sales ratio, which is inventory divided by the pace of sales, is 4.9 months versus 4.7 a year ago. That's what we'd call a balanced to slightly supply-heavy market. It's not a glut, but it's also not the 2-week insanity that we live through. In Palm Springs alone, there are 644 active listings. That's up from last year, which means there's more choice and a bit more negotiating room for buyers. Selling times back this up. The median days in the market across the valley is 47 days compared to 41 a year ago. Homes are still moving in roughly a month and a half. Slower than peak frenzy, but far from stale. And when you look at pricing, detached homes are selling at about a 2.6% discount from list, and condos at about a 3.3% discount. That's almost exactly where we were right before COVID. We're back to a world where you negotiate a bit, not a world where you waive everything and then go 50 grand over the asking price. So when you hear people ask, is it a buyer's market or a seller's market? What they're really reacting to is this mix. Slightly lower prices, more inventory, normal selling times, and modest discounts. Now that you've seen the numbers, let's answer the questions that everyone really cares about. What do you actually do with all of this information? Let's start with this idea of lower prices because that phrase does scare some people. A 0.8% dip on single-family homes and a 3% dip on condos is not a crash. It's the market taking a breather after a very historic run. The mistake that most people make is looking at one valley-wide number and assume it applies to every neighborhood and every price point. It doesn't. Some areas are flat, some are down a bit more, and some segments are holding almost all of their pandemic gains. That's why averages can hide opportunities that only show up when you drill into your specific city, the property type, and the price band. If you're a buyer, this environment quietly favors you, especially compared to the last few years. More inventory and roughly 5 months of supply means you're not fighting 10 offers on day one. You've got more choice and more time to think. The typical 2 to 3% discount you're seeing in the data isn't a fire sale. It's a baseline, it's negotiating room that simply didn't exist in 2021. In many high-end brackets, that percentage can be larger, especially if a home has been sitting longer on the market. So where does the value actually live right now? Well, often it's in the upper price tiers and in cities with more inventory like Palm Desert and Palm Springs, where sellers have more competition. In those segments, you can sometimes trade a slightly bigger discount or better terms like closing timeline or credits for updates rather than just chasing that absolute low price. A recent buyer I worked with didn't steal the house, but they did get a meaningful price reduction plus some key repairs and concessions, and they were the only offer, not one of 12. That's the kind of quiet leverage that this market offers right now. You also have to think about the rate versus price trade-off. If you're planning to own your home for 5 to 10 years, trying to time the exact bottom of prices usually is a losing game. You risk missing the right house or watching rates move against you. In a normalized market like this, it often makes more sense to buy the right home at a fair price, negotiate sensible discounts and repairs, and then plan to refinance if rates improve rather than waiting for some perfect combination that may never show up. If you're a seller, the strategy has changed, but the opportunity has not disappeared. You can still get strong results if you play the current game instead of the 2021 game. Today's buyers walk in expecting a modest discount already baked into the list price. If you price assuming someone will bid you up, you'll just sit. If you price realistically, knowing that 2 to 3% of negotiation is normal, you position yourself to sell within that 30 to 45 day window that we see in the data instead of chasing the last year's cycle. One practical shift is how you think about your list price. In higher priced cities and brackets, the percentage discounts tend to be larger, so starting at a rational data-backed price and preparing for negotiation usually nets you more than if you aim higher and then do big, obvious price cuts. Presentation also matters more again. Good staging, strong photos, and fixing the simple stuff before you list can be the difference between getting that solid first offer in a few weeks or being the property that the buyer used as a negotiating chip on your better priced neighbor's property. Finally, think about your position by price bracket. Homes over $1 million and especially over $2 million make up a huge share of the total dollar volume here in the Coachella Valley. In those ranges, you should expect longer conversations and more negotiation. Serious buyers are there, but they're picky. In the mid-range, discounts are often a bit tighter, which can actually help move up buyers. You might give a small discount on your current home, but then have more room to negotiate on the more expensive one that you're buying. So is it a good time to buy or sell? It's a good time to be disciplined. The people who do well in this kind of market are the ones who understand the numbers, accept that we're back to normal, and build their plan around that instead of around headlines or nostalgia. Let's shift into some real questions that I keep seeing on Reddit and in my inbox, and layer the data you just saw on top of them. The first one is now a good time to buy in Palm Springs, or should I wait for the prices to drop some more? I'm seeing conflicting information about whether this is a buyer's or seller's market. Well, now here's how I think about that question. We just walked through the numbers and prices have softened a bit off the peak, especially in Palm Springs, but we're not seeing a free fall. You've got more inventory, normal selling times, and predictable discounts. The risk in waiting for the bottom, as you don't know really where that bottom is until you're looking at it in the rearview mirror. Meanwhile, the homes that actually fit your lifestyle do come and go. If you're a primary or relocation buyer planning to be here for 5 to 10 years, the bigger lever is fit and terms, not squeezing every last dollar out of timing. In this kind of normalized market, your focus should be, does the home work for you in your day-to-day life? Is the payment comfortable? And are you getting sensible concessions based on how long it's been on the market? If those boxes are checked, tiny price wiggles over the next year or so matter a lot less. If you're a second home buyer, you want to respect how seasonable this market is, especially for condos. Condos move more in price between low season and high season, and some buildings or neighborhoods see more than others. Your edge is knowing which communities hold their value better and which ones see bigger off-season opportunities, and then lining that up when you actually plan to use the home. If you're an investor, you have a different lens. The question becomes, at today's prices and today's rates, does the rent you can reasonably expect cover your costs with a margin that you're comfortable with? That means factoring in taxes, insurance, utilities, possible HOA dues, and a realistic vacancy rate. The data we've gone through helps you understand your likely purchase price and negotiation room. The rest is about your underwriting and your time horizon. The second big Reddit question is, what's the real deal with HOA fees and vacation rental regulations in Palm Springs? I want an investment property, but I keep hearing different rules for every neighborhood. Now, this is where you really need to zoom in. There are two types of layers of rules: city-level regulations and HOA or community-level rules. The city sets the things like whether the short-term rentals are capped, which zones allow them, permit requirements, and enforcement. And then individual HOAs can be stricter. Some allow vacation rentals with certain minimum night stays, but some cap the number of rentals and some just simply don't allow them at all. When you're running the numbers on a potential short-term rental or a hybrid vacation home, you can't just look at price and rate. You need to also include monthly HOA dues, the possibility of special assessments, city permit costs, and any limits on how often you can rent. A place with lower purchase price but high dues and tight rules can be worse economically than a slightly more expensive home with lighter ongoing costs. For most buyers who want both lifestyle and some income, I tell them to start with, would I still be happy owning this if the rental rules do change? And then layer income potential on top instead of the other way around. The third question is very practical. How much utilities are and pool maintenance costs really do cost people here in the desert? Nobody gives a straight answer about summer AC bills and monthly pool costs. Well, there isn't a magic number because it does depend on the size and the age of your home, how well it's insulated, the efficiency of your HVAC and your pool equipment, and how you actually live in your house. Someone running the AC at 68 degrees all summer long in a large, older home with original windows is going to have a very different bill than someone in a new, tighter home who's only here part-time and then sets the thermostat higher when they're not here. What you can think about is categories. You'll want to budget for electricity, which spikes in the summer and then eases off on the shoulder months, water for landscaping and any grass you keep, and then monthly pool service and chemicals if you have a pool or spa, and then a cushion for occasional repairs like pumps, filters, or HVAC service. Instead of me throwing out a generic number that may not match your situation, the best move is to look at actual sample bills and quotes for your home that you're serious about. When we work together one-on-one, I can walk you through the real utility histories and the pool service estimates so that you can budget effectively, not just guess. The real answer to all three questions is that it depends on your price point, your city, and your time horizon. The data gives you the framework, but you still need to plug in your own specific situation. So how do you turn all of this data into a clear plan? Well, at a high level, we're in a market where prices are slightly down from last year. Inventory has normalized to pre-pandemic levels, and discounts and days on the market are back to what we used to consider normal. That means emotion and urgency have come down, and strategy does matter more. If you're a buyer, start by clarifying your budget and how long you realistically plan to hold on to the property. That alone tells you how much you should care about near-term price moves. Next, dial in your target city and the property type, because single-family homes and condo segments behave differently, and each city has its own pattern for pricing, inventory, and discounts. From there, use the data on days on the market and typical negotiation ranges to shape your offer strategy. How aggressive you can be on price, what repairs or credits to ask for, and when it makes sense to move quickly versus waiting for a better fit. If you're a seller, your first step is to benchmark your home against your specific city's average price and the discount norms. That keeps you from anchoring on outdated highs or on the lowest fear-based headlines. Then decide your ideal days on the market. Do you want to be in escrow 30 days, 45 days, or are you comfortable waiting for a longer particular number? Price and presentation should line up with that goal. Finally, go into negotiations expecting some back and forth. Today's buyers assume a bit of give on price and terms, and being prepared for that makes the process smoother and usually gets you a better net result than digging in on some 2021 memory of negotiations. If you remember nothing else, remember that using this kind of data to build a tailored plan is what keeps you from making emotional decisions based on rumors or headlines. January's Palm Springs numbers show a cooler, more balanced market where your strategy and time horizon matter more than trying to time a perfect bottom. If you want to walk through your specific goals, your numbers, and your neighborhoods, use the link below to schedule a free Zoom consultation with me. No obligation, and we'll build a custom buy or sell plan for your specific situation. Now, watch this next video all about living here in Palm Springs.